Interest rates are critical to housing values, and in some ways, rising rates lower values of real property, and lowering rates raise the value of the property because the payment streams to investors are inverted to the interest rates. They also have the effect of affecting buyers and sellers. The lower rates, more buyers can buy; higher rates, less. Lower rates, more sellers will sell because their older low rates are less valuable, and higher rates, more will hang on because they have a low rate on their current house. Where they buy is going to be more expensive. And so interest rates really affect the market. They're the most important monthly piece of the puzzle for buyers, and they really affect our market overall. I just find it interesting how the interest rates are covered in the news. We've since the election, everything about the economy has been hyper politicized. Terrorists are going to crash the economy, raise the economy. We have every political decision is going to make major effects. The debt, which I think is a problem in the long run, affects the stock market today. Then the next day is wiped out again. What's fascinating is you go back to November, the election, or January, the inauguration, you'll find that the market is about the same where it was. You'll find the stock markets are about the same on that time period. Interest rates are also just about the same. In fact, I would say take a look at this interest rate market for the last year, and you'll see that rates are about the same over the last year. They've been a little below 7% almost the entire time. If you look at a 5-year basis, this is about the flattest it's been in the last 5 years. Of course, COVID, dramatic jump. And you look at the maximum period back to 1975, rates have been fairly stable in this year period compared to other periods of time. So why all the drama about interest rates? What is it that causes that? Well, I think there's an underlying factor that goes into it. And look at how the news covers the subject of interest rates. So for example, here's NBC News or CNBC. The Federal Reserve is likely to hold your interest rates steady this week. Here's what that means for your money. And so the article has the Federal Reserve holding rates steady, which is an interesting moniker because the Federal Reserve will have you believe they're trailing the market or matching the market or correcting to the market, when the reality is we all know they're not. These men get together and decide how our economy goes. And then take a look at this picture. CNBC has a picture of Jerome Powell, who's the chair of the Fed. Rather than a meeting of all the governors of the Fed or all the banks or a picture of a bank, there's the picture of Jerome Powell, the good guy, with the menacing Donald Trump, CNBC being very liberal, the bad guy looking over his shoulder. So you have the good guy being made the good guy. Who is he? Because he's the villain to Trump, which means he must be good. Look at all the drama here about interest rates that really should be, in my way of looking at it, no different than who's got the best batting average. Not who will have the best batting average, but the batting average to date is based on your statistics to date. You would think interest rates would similarly follow unemployment rates, the inflation rate, the economy, economic production overall. Where is the drama and all the personality and the politics come to play? I think the answer is if you know who's really pulling the strings, you'll find out behind that. I'm Bill Gross. This is my weekly real estate update. We're going to start this week, though, a deep dive on interest rates. And so the Federal Reserve, if you go to Wikipedia, you get a whole story about all the things the Federal Reserve does. But one of the things that you will realize is it's not part of our government. The Fed chair is appointed by the president for a 10-year term, and that's pretty much autonomous. You have these Fed governors that really, this is just the banking industry deciding all these interest rates. Now, it's true that the president can fire the Fed chair for cause, as laid out in a law passed by the Congress. But what he can't do is just fire because he disagrees with his position. And so, while on one hand, everything in America is political, whether we should spend more or less on this program, more or less on foreign aid, more or less on welfare, more or less on Medicaid, everything there's a political decision on here, the Fed is meant to be autonomous and above politics. As if that's even possible, right? So that's the academic side of what they're supposed to be. But the reality is it's become very political. And if you read Behind the Firewall, you'll find that the latest is that the man appointed by President Trump, Pulte, of Pulte Homes famously, who's the head of Housing Urban Development, he is holding the task now, Jerome Powell, for artificially holding up rates as affecting the housing market. Now, look, if one it's kind of like saying that an umpire is calling balls and strikes unfairly. When I grew up, you really couldn't tell the difference or make a case. You look at a video and you weren't sure. Now, in baseball, they have computers and graphic screens and tell you when the umpire is right or wrong. You would think. Now, that's in baseball, right? In tennis, used to be umpires arguing about where the ball hit the line or not. Now you have actual lines, electronic lines on the surface that tell you whether it's in or out. You would think as something as important as our economy, we'd have actual numbers and data to point to determine interest rates, not Chairman Powell and his friends, the bankers, who are making these decisions. And what happens is, I think, in the long run, it becomes, like everything else, very politicized. Well, there is data. Theoretically, the Fed rates are interest rates, and they should track other interest rates. And so interest rates are determined by the quality of the paper, meaning who is it that's being lent money, the federal government, state government, a business, an individual, a credit card loan, a car loan. So the most clear factor of just where interest rates are without effect of who the borrower is are U.S. Treasury bills. And if you compare interest rates, the U.S. Treasury is defining the interest rate of the market, what buyers and sellers are willing to pay to borrow money and lend money to the United States federal government, is on this document the blue line, kind of volatile. The black line is the less volatile, but you'll notice there's always a gap. The Fed pulls down rates, and then when it overshoots it has to go back up. Pulls down rates, overshoots it, goes back up. Pulls down rates, overshoots it, pulls down again, way overshoots it, and now the Federal Reserve rates are, for the first time really in history, for a sustained period, above the actual interest rates, meaning this is the first time in my lifetime for a sustained period that the Federal Reserve is charging, banks are charging more money than the U.S. government is paying in interest rates dramatically over a long period of time, and yet they're a quasi-government agency. How can that be? And the answer is, the Fed is not acting as the United States government Fed, it's acting as the banker's ultimate banker. And they all want to make money. And so you can see the chart really tells no lies. This is no different than the baseball square. If you watch baseball or football, you have the line and you have replay, you can tell where it is. This is telling us now. We don't have to wonder. You know, it used to be you get these numbers once a week, once a month, maybe once a day. We get them instantaneously. We know that in this case, the Fed Reserve, Chairman Powell, has his thumb on the scale and wants bank rates to be artificially high for some reason. Now, instead of having an honest debate, is it good or bad that bank rates are higher than the interest rates are traditionally? We don't have that debate. We have this drama about is Powell good? Is he bad? Is Trump the king? Is Trump a president trying to look out for the American citizens? And this has a big effect on people in terms of their lives. There's an article written, I think it's terrible, by Bankrate, the winners and losers. And what this says is that interest rates determine winners and losers. And that, I think that's obvious. There are winners who benefit by the bank overcharging interest rates, and there are losers from the bank overcharging interest rates. Who are the winners? Well, obviously, the people charging the interest, the bankers. Banks get so much of the deposit at 0% on checking accounts and very little on passbook accounts. They get so much of money that way, and they lend it out at the federal funds rates. And so the higher rates allow them to lend more, get a higher rate. So lending at 4%, getting at 0%, making money on that disparate amount, whereas the U.S. government is paying a lower rate than those Fed fund rates. And so who loses out? Well, let me give you a list of the winners and losers. One of the winners of the market are people one of the losers of the market are homeowners who would like to sell, but they're stuck because their current mortgage is low, or should be the market rate. And if they're going to buy, they're going to pay a higher rate than they should have to. And so they have to stay where they are. And so they're losing the opportunity to move because the inefficiency in the market keeps them artificially stuck. A big winner in the market are credit card issuers because the variable rates are based on the federal funds rate, not on U.S. Treasury rates. Again, it's a way they can game the system. Since banks make more money when they overcharge on variable loans like credit cards, they have every incentive to have the bank overcharging interest rates so they can make more profit. So as long as they're making billions of dollars, you know there's money sloshing around that ends up in the pocket of people like Chairman Powell. Who else is a loser? Well, low-income borrowers are obviously losers because they're going to borrow money from banks or banking related, and those rates are artificially inflated compared to where they should otherwise be. So what we have here is really the bankers lining their pockets, using their power, using American guarantee of the banking system of taxpayers against the majority of taxpayers by profiting and charging us higher rates than we should have to pay. And Chairman Powell is the chief architect of this system. And while you can look at him and say, well, he's not making that much, his salary's not much, this is the kind of job where you work for the government for 10 years and then you're feted the rest of your life. You get honorariums, and your kids go to the best schools, and you get to travel the world and speak for a couple $100,000 a year, and you have book deals. This is how government has worked against American citizens my entire adult life. So what does that mean? Well, I hope at the end of the day, his term is up next year, one way or the other. Today, Friday, Pulte, the head of Housing and Urban Development, called for him to resign. I think he should. I think he's obviously benefiting his friends and his former colleagues at the expense of the American people. His job is to defend the economy, and he's not doing that very well. And I do think the interest rates are being covered as a drama rather than as an economic decision. Where should rates be, and what should drive those rates, and what should people do to benefit themselves? Okay, let's take a look. Now, normally I start with interest rates and then go into inventory. Let's take a look at inventory because we now have the main numbers out. And what we find out is that housing inventory rose in May up to 1.4, oops, I just lost my spot there, 1.45 million homes for sale nationally, according to Redfin, up from 1.410, up 40,000 units sales. So you have inventory rising in May, but that's always the case. You look at every single April to May change off and you'll see that. And so when you see the news that rates are, inventory is rising, that's not news. Inventory rising in May is normal. Also, you'll notice that inventory still is way below historic levels other than COVID. Other than COVID periods, inventory rates are higher now, but lower than they've ever been, despite the fact we have about 9 million more people in America than we did pre-COVID. And so you'd expect to have more homes for sale, more homes available, not less than we had before, and yet we have way less. So the problem is clearly the lack of inventory. One of the factors I mentioned was artificially high interest rates keep people locked in. Artificially high interest rates also keep builders from building new property because it's a capital-intensive business, and the high rates make it more expensive for bankers to borrow money to do construction loans and for new homeowners to buy houses. And so by any standard housing numbers, the rising inventory of May is insignificant. The reality is we're below historical levels, and more importantly, below the levels needed to create a healthy housing market. Now, locally in Los Angeles, our market is the 36, which is a slight seller's market, still has been a seller's market nonstop for the whole COVID period. But the best source I find for that is Altos Research, which takes all the factors in the market, combines them together into one number at 36. It's been softening periodically, yet still we're in the seller's market. That's the reality of our numbers. And I can just tell you, every listing I have gets attention. It's price right. There's an exception. I took a new listing in downtown LA in the Lofts area, right near where all the protests or riots, depending which word you use, is. And as a result, we can't even show the property, and my agent's still concerned for her own safety, rightfully so. We'll start showing, I think, next week, so it looks like finally we'll see some movement. So real estate is hyperlocal. Generally speaking, in Los Angeles, the market still is a seller's market. Okay, let's take a look at some real estate news. One of the things I like to do is point out what I think is bad news and critique it. Here we have the Scotsman's Guide, weekly mortgage applications fall on economic volatility. Again, this is the press covering kind of the horse race, forgetting the big picture. So you have this constant mortgage applications up, down, because of, and then they attribute some reason. In this case, economic volatility. I just showed you how mortgage rates are about the same they've been for the last year. The stock market's almost the exact same as it was November and January. Where's the volatility that's stopping people from buying? It's not volatility, it's a lie. It's the artificial higher interest rates and the artificial low inventory as a result. And I can prove it. Here is the same data the Scotsman guy is quoting. The purchase application number is actually published nationally. This is investing.com. They do a great job. And you'll notice all the volatility in 2024 and 2025. But you also should notice is that the numbers are way below where they were pre-COVID. Way below. We had twice as many applications almost meaning buyers filling out purchase mortgage applications to start the process to buy a house. Almost twice as many pre-COVID as we do now. It's not because of the volatility of the economy and the worry about Trump's tariffs. It's just so stupid to say that. And if you read that and follow it, you're just being misled. We have structural problems in our economy, and I showed the interest rates, and I'm showing the inventory. And what you have is, more importantly, a press that's not willing to tell the truth. They rather cover the horse race. It's kind of like quoting the Dodgers, the last game is that's the direction of where they're going, rather than overall where they are as a team. This is micro reporting daily or weekly and then missing the big picture, not putting context in the story is, I think, deliberately misleading. And I think it's because when you look at statistics, most journalists have a political bent, and they're just going to put the news that will be consistent with their political bent. Another example that I think is Housing Wire, which just fawns over Compass CEO Robert Reffkin. I've covered him in detail in the past. He might be a nice guy. He might be the world's greatest son ever. I don't know. Don't know the guy. Seems pretty smart and glib, and in some ways successful in that he makes millions of dollars. His company he's built is worth billions, though they don't pay any federal taxes or haven't to date paid substantial federal taxes because it's an internet company and there's some magic pixie dust on how not to pay taxes while they put out of business people who do. But here, look how Housing Wire puts this. Robert Rifkin continues his digital crusade, not campaign, not his digital arguments, not his digital position, a crusade against Zillow. Now, crusade implies, a righteous plan of action. People, good or bad, went on crusades doing what they thought were God's will. And does Robert Reffkin, does he have that kind of religious fervor about this? Well, I saw last week's episode of this. I reported I saw his speech at his convention, and he has no data support that their policy of, and again, this all goes back to Compass wants to hide listings for a couple of weeks so only they can sell them, and they'll tell the seller, oh, this is good for you because while we're doing all this magic work, we're going to help you get important information nobody knows about. And then if the house doesn't sell, they put it on the market and then basically mislead everybody else into thinking it's never been marketed before, including their own customers who walk in the door. The whole thing is nonsense. And they have no data. In the past, I went on their website and showed you how their data is self-contradictory. No data. The policy is good for the seller. It's good for Compass because they make more commissions. There's no data. In his convention, he talked about one example that made no sense. And here now, Housing Wire, rather than asking for data, presenting data, is their policy helping sellers, yes or no? Is it good for customers, yes or no? Now he's a crusader. I mean, really, these Housing Wire is just fawned over him, and so has Inman and so have other real estate press. Why? Because they advertise and they bring people to their conventions, and so what these companies can't afford to do is upset and rock the apple cart. This is like pharmaceutical companies giving advertising dollars on television. As long as they do that, the television will not criticize pharmaceuticals. As long as Robert Reffkin brings people to conventions and advertises online, these news organizations are not going to hold his feet to the fire properly. Okay, speaking of misleading news, the big story last year was the NR settlement. The attorneys, the lying piece of filth, in my opinion, who bought this case for no reason, I think dishonest reasons, I covered that in detail. The premise was that they were going to disintermediate the market and create more competition so that commissions would go down. Well, did it happen? Well, yet another study says no. Here's a study in Housing Wire that they're quoting from another company, so that commission rates actually went up last year. And obviously, if you make it harder for people to do their job, they're going to charge you more for their time, right? And so the idea that we're just going to, and if you, again, I've covered this in detail in the past, but the NAR settlement, all it did was rewrite every form, every piece of paper, every procedure. Every agent had to spend hours and hours learning not how to service their customers, but how to cover some paperwork so attorneys don't sue us for nonsense. The stated purpose was, the reason why the settlement was as big as it was, because the jury believed the false argument, this would cause commissions to go down. Well, no. It had nothing to do with commissions. The whole thing was just a scam for the attorneys to get paid. They get hundreds of millions of dollars. Customers around the country get less service. Agents waste time on non-service providing activities. And in fact, at the end of the day, surprise, surprise, commissions don't go down. So again, attorneys lie to us in the course of a lawsuit. Who's surprised about that? In the news, not covered very well that I didn't see, because NER is too busy being sued by class action attorneys on nonsense cases. It's National Home Ownership Month in June. Here it is, the 22nd as I record this. And I didn't know about that. I'm a real estate agent. How do I not know this of everybody? And I just think it just shows that the news covers all kinds of crazy months about different groups and different products and housing is not just another thing you can buy. Number one, it's one of the largest sources of wealth for Americans. It's part of the American dream. And people who own houses are committed to their communities. It creates taxes for our cities, states, and government. Why is it that people don't celebrate this more? I don't know. Why is this not covering the news more? I don't know. Why is there not education around this time of the year? I don't know. It just seems like the news has become all about scare porn, and the real estate industry just jumps on that bandwagon. At the end of the day, missing good opportunities to educate and inspire people. Okay, last news story of the week. This one is about the idea that Compass is fighting Zillow and the online companies. They both want to be monopolies. Compass wants to be the only real estate company by hiding all the listings and then kind of lying about why they do it. Zillow wants to make all the listings on Zillow and destroy the MLSs. So we have these two different methods to control the market. While jumping on board with Zillow is Homes.com and CoStar, which owns Homes.com, and Redfin, which was bought by Rocket Mortgage. So you have Rocket Mortgage and Redfin, and now CoStar and Zillow fighting against Compass on they want the listings on their websites only, or they want them on their websites and to put the real estate companies out of business. And then you have the Compass that wants to hide them. And so what we have now is nobody, and what nobody talks about here is what's best for the customer. It's always what's best for their business model. In Compass's case, kind of a fake story of why it's best for one seller. But there's no data. Could you really imagine you have CoStar, the leader in commercial real estate data and information, Rocket Mortgage, Redfin, Zillow, and Compass, and nobody has any data whether or not hiding listings is better or worse? Of course they have data. They don't want to publish it because it doesn't support their position. And so overall, I would say that this is just a matter of dinosaurs fight. The big dinosaurs fighting in the middle of the jungle. The little dinosaurs running around shouldn't get stepped on. And at the end of the day, customers are very well served. And overall, I'm very happy with their personal relationship with a real estate agent selling them, rather than having to turn housing into a purchase process like Facebook or Google. Nobody wants that. And Compass kind of misleading the public and hiding listings. Nobody wants to be misled. So at the end of the day, again, I think our economy is a battle between the large monopolies and the small entrepreneurs. We've all given up so much of local shopping, local businesses, local community members during this process. And I don't think this is changing anytime soon unless we're aware of it and ask the question, well, how is this, if I'm a seller, how does this benefit me selling my house? What's best for me and my family when I sell my house? That's a question that they should be asking. And as an agent, they should be able to answer for you. And I answer that for my customers every time. What do you think? Taking some positions today. Love to hear your comments. Like, subscribe, put a comment in below if you disagree with me. I'm at LAProbate on social media. And as always, make today your best day ever. Thanks so much.